365 Finance module for fixed assets effectively manages and oversees all fixed asset business processes. It maintains records of essential fixed asset details and their subsequent transactions. Fixed assets acquisition business processes have various methods via purchase order, which involves the purchase order, product receipt, and invoicing, or through lease initial recognition when the asset is associated with a lease contract. They can also be acquired through the conversion of inventory into fixed asset when an item initially received and stored in the warehouse, then converted into a fixed asset. Alternatively, fixed assets can be acquired from investment project, which represent project under construction, with all project expenses capitalized into a fixed asset. Lastly, fixed assets can be acquired through journal entries utilizing either the fixed assets journal or the general journal. I am Mohammed Amer, sharing my thoughts around business process in Dynamics 365 Finance. Now, let's dive into the process of acquiring fixed asset through purchase order. The business process commences with the initiation of a purchase order. It is essential to specify whether you want to create a new fixed asset through the purchase order procedure or select an existing fixed asset. Upon the receipt of the ordered asset through a purchase order, here let's assume you have chosen to generate a new fixed asset ID during this process. Consequently, the system will generate a fixed asset ID based on the selected asset book and initiate an accrual entry. Subsequently, when the invoice arrives and is posted, it results in the conversion of the item from inventory into a capitalized fixed asset. Simultaneously, it generates a vendor invoice as a liability and reverses the previous accrual entry. Now, in this short video, we will explore how to acquire fixed assets through a purchase order when dealing with a foreign currency. Before jumping into the process of acquiring fixed assets in foreign currency, it is important to establish some foundational definitions and concepts in Dynamics 365 Finance. These include understanding how transactions are recorded in multiple currencies and recognizing the differences between monetary and non-monetary accounts. In Dynamics 365 Finance, every transaction can be recorded in three different currencies. Transaction currency, the currency used in the original transaction. Accounting currency, the functional or local currency used for the legal entity's accounting processes. It is defined based on how the company wants to represent its financial reports. And we have reporting currency, the currency used for external or internal financial reporting, which may differ from the accounting currency. Furthermore, monetary accounts such as cash, payables, and receivables are subject to foreign currency revaluation adjustments, while non-monetary accounts such as fixed assets, inventory, and equity typically remain at their original recorded value. These differences will be crucial as we walk through the foreign currency acquisition process for fixed assets. When acquiring a fixed asset through purchase order, three main elements come into the play: the vendor, the fixed asset, and the purchase item, which may be an inventory item, service item, or procurement category. For this example, we will focus specifically on inventory items. From an accounting standpoint, these transactions affect balance sheet accounts. The vendor account is considered a monetary account, which means it is subject to currency revaluation, while both fixed asset and inventory accounts are non-monetary accounts and therefore are not subject to currency revaluation adjustments. In terms of transaction postings, the vendor transaction is recorded in the transaction currency, but the inventory and fixed asset transactions are recorded in the accounting currency. It is important to understand this characteristic before moving on to more advanced topics, including the reversal scenario, which I will cover in a separate video. When acquiring a fixed asset through a purchase order in a foreign currency, for example, euro, while the company's accounting currency is USD, the following steps occur. In the product receipt, an accrual is recorded in the transaction currency, euro, while the cost of the purchased materials is recognized in the accounting currency, USD. Remember, this side is the inventory side of it. In the invoice posting, the accrual entry is reversed to remove its effect. The vendor invoice is then posted in the transaction currency, which is euro in our example, and the inventory cost is recorded in USD, covering both the cost of purchased materials and the purchase expenditure for the product. And the final step, the capitalization of the fixed asset, the inventory item is issued and capitalized as a fixed asset, a debit to fixed asset account, which updates the asset and acquire it. And now let's have a short demo of acquiring a fixed asset in a foreign currency from a purchase order. Here in Dynamics 365 Finance, let's check first our General Ledger module where we have accounting and reporting currency setup under General Ledger, Ledger setup, Ledger. Here under currency first tab we have the accounting currency and reporting currency. In this demo data we have USD as accounting currency and reporting currency. Of course, reporting currency could be anything else. As we are in the General Ledger module, let's check the currency exchange rate under currencies, currency exchange rate. I will filter on USD against euro, and this is the exchange rate between those pair of currencies. Now let's create a purchase order from accounts payable, purchase orders. I will create a new order from this vendor and I will select my warehouse and site and I will change the currency from USD to euro, and this will be my transaction currency. The Surface Pro item and move to the fixed assets tab and I will select new fixed asset and I will assign computers group, and from purchase confirm the purchase order and then receive. And here in the product receipt I will give the product receipt a number, and at that point the fixed asset number is created but it is not acquired yet. And then move to invoice and I will post the invoice. I will give it a number and update the match status for the three-way matching and then post the invoice. At that time the fixed asset number is acquired, and if I select this book and we see here the status is open, and this is the acquisition price transaction, and this is the transaction amount in accounting currency. To be able to check the posted voucher, I need to make sure that transactions have been transferred from sub-ledger to general ledger. I need to check it from general ledger, periodic tasks, and sub-ledger journals entries not yet transferred. You see here we have two sub-ledger journals are not transferred yet, our packing slip and the invoice. I'll transfer both of them, go back to the fixed asset from fixed assets module and select our fixed asset ID box and I will select this book from transactions and details to check the posted voucher. And as you see here, we have transactions in Euro and USD. The Euro transactions are related to the accrual reversal and the vendor liability transaction, and the USD transactions are related to the fixed assets and the inventory item. Another thing that we can check from the voucher transactions, if we go to transaction origin, this form will show us the affected sub-ledgers as well as the general ledger accounts. Here I will focus on the sub-ledgers. We have the vendor, the transaction is in Euro, and we have three lines for inventory. The first one, financial update in USD, and then we have another one, also financial update in credit, and also it is in USD. So this is the inventory in, and this is the inventory out. And finally, we have the fixed asset, the acquisition transaction in USD. That's it for this demo. Let's go back to recap our presentation. The substance of this video in a nutshell, the vendor account is considered monetary, while fixed assets and inventory accounts are non-monetary. Vendor transactions are recorded in the transaction currency, but fixed assets and inventory are recorded in the accounting currency. The fixed asset acquisition cost depends on either the spot exchange rate or the fixed exchange rate used on the invoice date. Thanks for tuning in. Please feel free to drop a comment below and let me know your thoughts. Stay tuned for our upcoming video.